Hey, friend. Happy Money Making
Hey,
Monday.
happy Money Monday.
Yes.
Yes, you are
Well,
radiantly glowing this morning.
ditto. With your floral pattern and your all your oxygenated plants behind you. What's the aloe vera, honey? You have to come over
Yes,
there and get
our
some to
aloe
make sure this
is, that thing
thing.
is growing.
Yes, honey. Yes. Well, Mercedes,
Awesome.
good morning. It is such a blessing to be here with you today. For
Yeah.
those who are joining us, this is Money Making Mondays with Quintaria and Mercedes, and we
Mhm.
are financial people who are committed to growing our tribe and our community financially, and beyond just that, like we base a lot of our concepts on financial principles, how to understand life insurance and annuities, lifetime income. But
Mhm.
for the most part, it just allows us to be better people across the board. Like that's one of the things I can say. I have found such a blessing from our time together is that the more we meet up and do this, the more conversations we have. It just makes me step my game up as a human being across the board. So thank
Absolutely.
you for always
Real
showing
life
up.
scenarios,
Yep.
I mean, we're living this real life, and people are affected by it. And when you put in that love, and the principle of loving our neighbor as ourselves, you get a chance to learn from other people, and just we work together to make the best of this life, right?
Yeah. Yeah. I
Oh,
guess I kind of
mhm.
skipped introductions. I guess we can do a quick, brief
Yeah.
introduction. You want to kick it off since I missed the
Sure,
opportunity?
sure. Yeah, I mean, guys, most of you know who I am, but if this is your first time, my name is Mercedes Coates. I am the CEO and founder of Coatesway Financial, a financial services firm. We basically just specialize in working with living benefits, insurance, annuity, child legacy planning, and mortgage protection. And today I'm here partnered with Ms. Quintaria Brunson. I'll let her introduce herself.
I am Quintaria Brunson, and I am the owner and founder of a financial strategy firm called the Brunson Approach. And we are committed to working with entrepreneurs and serious individuals with structuring lifestyles and businesses that will allow you to be financially solvent, financially competent, and ultimately put you in position to build the legacy that you desire. There are so many amazing opportunities out here, and our goal is to make sure that people are aware and they create strong systems so that they can scale their business, which will enhance their life and income and all of that. So
Yep.
I am excited to be here again today. And before we get started with today's topic, so today we're kind of going back to the basics. We've been doing this for about 2 years now. We're in
Yeah.
our second year for sure, and we've had some great conversations. But it's nothing like getting back to the basics. Sometimes those fundamentals we kind of overlook them because we're doing so many trick plays. But it's such a good thing to get back to the basics.
Yep.
I have a quote, and it says, "An expert at anything was once a beginner," and
Mm,
that's by Helen
mm.
Hayes. And when I thought of what we were discussing today, that quote was just so it just made so much sense, because sometimes, like I said, when you become financially when you have a level of financial literacy, and then it moves to
Uh-huh.
financial proficiency, and then you're a financial master, those basic concepts are still there for those of us who are on this journey. And I also want to make sure for those who are considering starting this journey, who have not booked a consultation for whatever reason, that they know we all were once a beginner, like
Yep.
so I'm very excited to dig into this topic today.
Awesome. Love it. Love it. Guys, we bring many years of experience. 12 plus years for myself, being in the life insurance and benefits space. So, just kind of bringing it back to the basics does I think it's super important just because, when you start a new job or you're transitioning from a job to a business, you got to understand what's made available to you and how to structure it the right way. So today we're just going to flow into those basics, and I guess we can get started, right?
Okay.
Perfect. All right, so let's just kind of jump right in. Let's talk about life insurance, right? Typically when you hear about life insurance, most people are kind of like, "Oh my God, I don't want to hear about it," right? Because you think about passing away and things like that. But I will tell you guys, this life insurance was created as a way for us to pass on wealth and to make sure that our families or loved ones who are left behind can still maintain the same lifestyle that we work so hard to achieve, right? And I will tell you, the life insurance, Quintaria, has changed dramatically. I mean,
It
the last
has.
175 plus years, I mean, it's really just been about like the death benefit, leaving it for the family. But there has been a huge change in shifting from death policies to now actually life policies that you can use now. So, what I want to go into now, guys, is just kind of talk about, well, what types of life insurance is there? What do they do? How do we know which one to choose, right? So, as you can see here, it talks about life insurance being able to pass on money from the passing of a loved one to a beneficiary of their choice. So that provides some type of peace of mind. That money goes directly to who you choose. So, do you ever get any questions, Quintaria, about, oh my goodness, who do I put down as the beneficiary?
Benefit.
You ever get any
Yes.
questions
Yes.
about that? I know
Yes.
I
No, I definitely do.
Uh-huh. And one thing that I always tell parents, if you are leaving money to your children, just keep in mind that if something does happen to you before they're 18 and they are solely the beneficiaries of that policy will not pay out to them until they are 18.
Yeah.
I,
Yeah.
I do see that a lot if you're not structuring it in a trust and things like that. So you want to make sure that you have a portion of that death benefit left to someone who is an adult over 18, who's responsible enough to make sure that the children does have or can access the funds, at least a portion of the funds if that does happen before they're 18. So just keep that in mind, guys, when structuring a beneficiary.
Yeah, I have that conversation a lot too. And we get into trust and setting up different things to make sure that that something is in place should you expire while your children are young, so that you'll have something in place to support them. But
Mhm.
again, going back to us having a conversation about the basics, people don't know what they don't know. So they, when you think of who do you want to leave something to, it's natural to want to
Yeah.
leave it to your children. However, we want to leave it to them in such a way that they can actually utilize it. And that was a mistake that I made. By the grace of God, I am still here, and all of my children are adults and in their 20s now. But when I had life insurance when they were younger, they were the beneficiaries. So that, and my biggest concern was, as a young single mom, I was like, I don't want to leave here and my children, like somebody has to take care of my children and there's no funds or no money for them. So that was a fear for me. And I've spoken about that in other conversations we had. But lo and behold, that was a fear that I had. And I still did not have them in position, for the one thing that I feared the most. If that, like, how crazy is that? So these
Yeah.
conversations are so necessary and so needed, because I thought I was doing a good thing. It seemed like it was a great thing. Like I'm a mom who has small children. If something happens to me, I want this money, I want someone to have money to be able to care for my children. And that if the worst case scenario had happened, my babies would have been in a messed up situation. So we've got to have these conversations and elevate our basic understanding of how these policies work for us.
Right. I agree. I mean, no, you definitely were doing the right thing. It's just again, just like some of the nuances. This is why you want to work with a professional to help, guide you on how to structure it the right way. So absolutely you had the right intentions. But again, it can be detrimental. I've seen it happen in the past. Where the spouse has passed away and just left it to the children and not the spouse. So
Mm,
that is important to understand that their dependents to be sure to have at least an adult who can take care of a portion of the funds.
yeah.
Okay.
Or set up a trust, but that's a whole
Yep.
nother conversation. Yep.
Mhm. All right. So let's move into this. I'm gonna make this a little bit bigger. Let me see if I
Uh-huh.
can blow it up a little
Work
bit.
your
Oh,
magic, honey.
hold
Work
up.
your
I don't
magic.
know what I just did. Wait a minute. Wait a minute. Let me see.
It's
Okay, no.
big though. It's
Is
larger.
it big? Okay.
Yeah.
All
It's the
right,
whole
perfect.
we're gone and it's on the whole screen.
Okay, perfect, perfect.
Mhm.
All right, guys. So let's look at the different types of life insurance. So when it comes to term insurance, term is just what it says. When you see the word term, you got to think about terminate. It's a
Mhm.
temporary policy. It's typically put in place to cover liabilities. If you are in your working years where you need a lot of insurance, but maybe you're not making a whole bunch of money or you want to keep your costs low, term is a great concept to use when you get that big policy for a small amount of money. Well, why is it so cheap? The reason why it's so cheap because it will terminate after a length of the term. So you typically can get a 10, 20, or 30-year term, and that policy payment will remain fixed for the length of that term. And once it expires, let's say you have a 30-year term, $1 million, 30-year term, in 30 years, that term would cancel out, or you can decide to renew that term. But what happens, what a lot of people don't know, when you renew a term, it quadruples in price. And every year that payment goes up. So typically, with term insurance, you want to buy it temporarily to cover, again, those liabilities that are going to go away in the future, your mortgage, your children being dependent upon you, you having a lot of bills and or a lot of
Mhm.
debt that you need to cover for that length of time. And then once that goes away, you no longer need that term policy.
Yeah,
Okay.
I think a mortgage is and mortgage protection.
Hmm.
That is a great example of how a term policy can add value to one's life.
Absolutely.
And also the fact that sometimes you got to get in where you fit in. Like,
Yep.
so if that is where you are, it is better to have something in place than nothing at all. And our policies still have additional benefits with term policies as well too. So
Yeah.
because sometimes people turn their nose up at term, but it has its value if you understand why you need it and how you can use it to leverage term to continue to grow.
Absolutely. And guess what, Quintaria? I tell a lot of people, listen, you start where you are. If right now you need to keep your costs low, then you can go with a term policy. Term is like renting an apartment. And when you rent that apartment and you ready to buy that house, that permanent policy, that term can be converted over to a permanent policy. As long as you qualify for that term, you no longer have to do a medical check. Meaning, it doesn't matter if your health changes. It doesn't matter if you're incapacitated at that time. You can convert that term over to a permanent with no proof of insurability. So you
Yeah,
are basically going from that apartment to that house without having to requalify.
yeah.
That is the purpose of getting in while you're healthy enough to qualify.
Yeah, yeah. And we would
Okay.
rather have you covered so that you have
Yep.
options. You
Hmm.
know, what happens is people want to get ready and you lose your options. So
Yep.
like Mercedes said, get in where you fit in because you
Yeah.
have more options at that point.
Absolutely. Absolutely. Just get started. One of the myths that I've heard in the industry is that, oh my goodness, life insurance is expensive. Actually, guys, it's really not. I mean, for children, you can get life insurance as low as $8 a month. Something really small. Even a $20,000, $30,000 term can cost about $15 to $20 for adult. I mean, it is literally so low. 100,000 for kids is nothing. That's $20. I just spent that on what? What did I buy? That was $20. This daggone expensive orange juice at the Amish market is $20 a gallon. Okay.
It better be good, honey. No pulp, no
It is good.
seeds.
It's fresh, but dang, it's $20 at the Amish market. But guys, just just understanding that term is cheaper than permanent, but it is temporary. So think of it like renting until you're ready to move into permanent. So let's kind of go over permanent insurance.
Mm-hmm.
Most people, when they hear about permanent life insurance, oh yeah, I heard of whole life. Most people just know whole life, but there's actually like 3 or 4 different types of permanent policies. And whole life being the oldest traditional type, where most people will use the whole life policy as a final expense policy, a policy that would cover the burial expenses, the things that you need, the final things you need at the end of life, burial, casket, headstone, that type of thing, where typically people need about 15 to 20,000 for a burial. So whole life insurance was structured as a permanent plan. It does build what we call cash value. So when you hear about policies that have a savings portion, with whole life, the insurance company will determine what your savings will be. And typically you're talking about 3 to 4% interest on a whole life policy. Okay. Now, the premium is a little more expensive. Why? Because it is fixed, meaning you're going to get that return every single year in the policy, but it does take about 3 to 4 years before it starts to accumulate cash value. Okay. And that's whole life. What happened in the 70s, Quintaria, is that people wanted a little more flexibility. They wanted to be able to earn more interest. They even wanted to take advantage of the stock market. So what happened in the insurance industry is they started to create flexible policies. And this is when you hear about concepts called universal life or
Mm-hmm.
index universal life or variable universal life policies. So the difference between the two, between whole life and universal life, is the flexibility, meaning you can change your premium payment. And you can go up and put extra money into the savings, or you can even go down if you're going through hardship without losing your coverage. I'm sure you heard of people like, oh my goodness, the first thing I had to drop was my life
Was my
insurance
life
because I got
insurance.
hurt. I got
Yeah.
sick, I got hurt, I can't afford it. I'm gonna drop this life insurance, right? Working as a union benefits rep for about 4 years when I first started in insurance, one of the things that I used to hear a lot was my elevator workers would fall and get hurt, or my steel workers would get injured on the job. And they would call me and say, Mercedes, oh my goodness, how can I use my life insurance? And I'm like, you can't, right? Because you can die, unfortunately,
Yeah.
right? So one thing that I found out about these policies, Quintaria, is that now the industry has changed where now you don't have to die to use your
To use
policy.
it. Mm-hmm.
Yes. So we're going to kind of get into living benefits in a second. But the major difference is now these permanent policies, they build cash value, but they also give you the opportunity to earn money based off a stock market, to put additional monies into the savings account. So you do have some options of flexibility on how you want to structure your plan. And it just depends on you working with a professional insurance agent who knows their business, which is very important, to show you how to structure the right permanent policy for you with cash value accumulation. Do you have any questions on that or anything that you want the people to know on the permanent life side that I did not discuss today?
No, no, no. You're doing a really thorough job. The key, I think, is allowing people to know and understand that you have term and then you
Yeah,
have permanent, and that
correct.
within those there are variations within those. However, those are, like I said, it's the basics today. We getting
Mhm.
back to the basics, and I think you've done a very thorough job of going
I
over that.
appreciate that. Thank you so much. So, guys, just understanding where you fall. If you are in a position where you can save a little extra money, the Index Universal Life does give you the opportunity for the highest level of growth. If you are just wanting to have permanent insurance with a little savings, then you want to work with that universal life policy. And if you're just solely focused on how can I make sure that my mother, my grandmother, myself just has a little burial protection, then that whole life comes into play and it gives you that smaller amount of insurance, just for that specifically. Okay. So I do want to move into the living benefits really quickly. For me, the I would say the greatest change in the industry that I love is that I was able to help people starting, I believe, in my fourth, going into my fifth year of insurance. When I heard about this concept of not having to die to use your insurance, I was like, what? What do you mean? How does this work?
Yeah.
I've been doing insurance for 4 years and I've never heard of this. They call it living benefits. Guys, in 2007, amazing, amazing company, 175-year-old company now. They came out with this concept in 2007 that said that you no longer have to die to use your life insurance. Meaning, in the event that you get sick or hurt, in the event you develop a terminal illness, a critical illness, which is like heart attack, stroke, cancer, disability, right? I'm sure you know someone who's had breast cancer or prostate cancer, or even had a heart attack, or even got injured in a car accident,
Mhm.
traumatic brain injury, coma, paralysis. All of these things now allow you to accelerate your death benefit early, which means that you can basically tap into that death benefit as income. And guess what, Quintaria? It's free.
Yeah.
You don't have to
No
pay any
additional
additional
cost.
premiums for that. To me, I said, wait a minute. You got to show me this. Are you serious? You mean to tell me if I get diagnosed with cancer, I can tap into my life insurance and they'll cut me a check?
Yeah.
Yes. This is a real
and
thing.
and and not just for the sake of, oh, I can tap into my life insurance. Like most of us, the average person, we want to live as long as we can and be
Mhm.
happy and healthy and as stress or burden free as we can. What I
Yes.
love about living benefits is, if you are in a position that you need to tap in to your living
Mhm.
benefits, or you have to consider, should I use it because of a life-changing incident, you it's almost like an additional support system already
Yeah,
built in, so I can focus on whatever my health needs, and all, and other, I can focus on my family. If I were
absolutely.
diagnosed with a terminal illness, and terminal illness for the policies we work with is 24 months. So if I have that prognosis, I want to focus on what is most important. And between
Healing.
you and
Recovery.
I don't want to be stressed about my
Oh,
finances. So that is one thing that I love, because it
yeah,
gives you an opportunity to, one, do what you love with who you love, but two, to alleviate a burden. Like
for
it's something
sure.
you don't have a lot of control over. But isn't it a beautiful thing to have put something in place that will allow you to focus on, to
Yeah.
decide for yourself what is most important, and it's not worrying about paying a mortgage and all of this
Yep.
type of things, or where's the money going to come from. Is little Jimmy going to have to leave his school because I can no longer afford it? All of those type things. And you can keep the main thing, which is living a long life, or as long as
Yes.
we possibly can. So
Yes.
you're doing a wonderful job, but I just had to jump in because I
Yes.
think that is, like, that's just so amazing. And that's what it's all about. We know at
Yeah.
some point we're all going to transition. However, if I were in that position, I thank God that I have some things in this place, policies like this, that already kind of alleviate a level, some of the burden that comes along with being injured, critically, having a chronic illness or things of that nature. So I
Yeah.
love that about this, the living benefits.
Yeah. I mean, for sure. What you just said, actually, we did a sample in 2022. We looked at about 12 different cases, and 8 of those cases of where individuals were able to accelerate the living benefits, they had a chance to come and speak in front of about 2,500 people, and they shared their stories. Is that the reason why, Quintaria, they were able to recover faster is because they had that peace of mind. They
Yeah.
said that because they didn't have the stress of, oh my goodness, how am I going to feed my children while I'm sick? Or how am I going to keep a roof over our head? That they were able to focus on their recovery. And for me, it was so pivotal. Even though I have been working with the concept, it's nothing like hearing it from
A
survivors
testimony.
who
Mm-hmm.
are absolutely well now, cancer free, no issues, but they were able to make it through that time because of this type of life insurance. So,
Yeah.
by all means, what you're saying is solely true. And just hearing those testimonies were just amazing. So we are doing good work, and this is one of the reasons why I love talking about life insurance, because of the peace of mind and the foundation that it gives to families, where you don't have to lose your things that you work hard for, your lifestyle you put together.
Yeah.
That peace of mind is everything, especially for me. It's everything.
Yeah. Yeah. Ditto. Same here. Same here.
Yeah. So the last thing I just want to structure, one of the major changes, Quintaria, that they added this year, I'm sorry, 2023, and actually February of 2023, they added what we call the Alzheimer's rider. And
Yeah.
Alzheimer's is a very terrible disease, that is debilitating to individuals, right? It takes away their memory, their means to focus and do just regular daily activities. Alzheimer's is on the rise. They actually came out last, I think it was about 2.5 weeks ago, and said that about 80 million Americans will develop Alzheimer's by 2050.
What?
That's a lot of people.
That is
That's a
startling.
lot of people. By 2050, they're saying that about 80 million people will be diagnosed with Alzheimer's.
Yeah. Wow.
It's a very
Wow.
sad statistic.
And it is a reality. Who
It
doesn't
is.
know someone that suffers from it, or a family that is working through helping another family
Yes,
member that's suffering?
absolutely. I mean, guys, listen, we are right now, I think most of our audience is about our age, right? Um, we're working extremely hard. We're doing amazing things in the community, right? But what I see is that not enough of us are preparing for our futures, right?
Mhm.
These concepts, when it comes to living benefits, guys, we don't ask to get sick. We don't know who's gonna get sick. I mean, there's 1 out of 4 people who would develop a critical illness. One
Mhm.
out of 4 is a lot. 1 out of 3 will have some type of chronic illness, which means you can't do your daily activities of eating, bathing, toileting. We don't ask for it, right? Just like our parents didn't, or our aunties and our uncles didn't. They were YOLO, living their
Yeah.
life, right? I mean, let's call it what it is. And as you're living your life and you eating that good food, and we got a lot of cooks out here doing their thing, even vegans, still getting sick and things like that. What I would suggest that you guys do is be sure to take care first things first.
Yeah.
The best thing to do is be proactive, that you don't want to be reactive and wait till things happen. So if you can sit down with a professional like ourselves, find out what you qualify for today. The younger you are, the lower the cost for insurance, and you can get a
Yes.
lot of coverage right now while we're young and healthy, so that if these things do arise in the future, that you will have access to income. Not only
Yeah.
that, best case scenario, nothing happens. You got cash value accumulation, monies that you can
Thank
use
you.
for retirement, for income stream, even for post retirement, to add additionally to your current 401k, your TSP, or whatever other type of investments you have. Life insurance does bring a great way to have tax free income in addition to what you're
Yeah.
currently doing.
Say that. So
So,
so many benefits. So
yes,
many benefits. Yeah.
yes.
Yeah.
So,
And in
I mean, guys,
addition
that's
to the
uh huh.
original purpose, which was leaving a legacy,
Yes,
like, I love these new legs to life insurance, but the fact that we can be responsible and contribute to our future generations, and we can have access to help our own current life, that's a win-win
yes.
situation.
It's a
Who can't be happy
multi-generational
about that?
tool. It's
Yeah. Yes.
multi-generational. What you do today will help your great great grandchildren. Now we're talking about truly leaving a legacy that we can guarantee. And I say guarantee very strongly because this is the one thing that I know of that guaranteed, as long as you have the policy that when you transition, it will go to the next person. And
Yeah,
it can continue to just go to the next person, to the next person. It's a multi-generational tool that can guarantee a wealth transfer to your family as long as you are consistently keeping this as a financial tool in your portfolio.
I
Great
love
tool.
it. I love
Okay.
it.
So I think that is good enough information for you guys to get started.
So we done,
I
that was
think
enough.
we
That we done hit enough of the basics.
Yes, I think we
Yeah,
have put you guys in position to, get started and kind of, have a better understanding or take on which plans to choose. We are here to help you structure it so you can reach out to each either one of us, doesn't matter. We work together as a team. Our links are in the bio.
hmm
And do we have anywhere else that they can find us or how they can find us?
yeah. I'm on social media under Legacy by Quintaria, or you can Google the Brunson approach, and my
Mhm.
information will pop up. But if you're watching this, our contact information is attached to this as well too.
Awesome.
hmm
Awesome, guys. Listen, we're
Yeah,
here to help. So, if you're ready to get started, get started.
yeah.
Even if you start with a conversation,
Even
it's
if
just
you're
getting you
not quite
started.
ready, it there's a reason why this
Mhm.
video popped up, in your feed, in your timeline. There's a reason why you stumbled upon it. So
Yep.
even if you feel that you're not ready, what is wrong with having a conversation? What,
Yep.
like Mercedes and I don't bite, and we definitely can't bite you through a Zoom or a
Right.
phone call. So,
Exactly.
I just want to encourage us to continue to navigate upward, in an
Mhm.
upward motion, through learning more financial concepts, to exploring things that you may have heard about but you don't know a whole lot about. Because like I always say, these things are simple, not easy, but they're
Mhm.
simple concepts that once you begin to get it, you can put them in place to have the lifestyle, and leave the legacy that you desire.
I agree. I
Yeah.
agree. Yep.
Well,
But
this has been another wonderful conversation.
yep.
Mercedes, thank you as always for sharing great insight. And Tribe, I hope that you all have been blessed by this, and we'll see you next week.
Yes. Next week, guys. Listen.
Yes.
See you soon. Thank you,
Yep.
Quintaria.
You're welcome. Have a great one.
Bye, guys. Happy money.